3, 2,
2-1. 1.
1.
All right, there was a football game this weekend.
There was one yesterday.
There was one yesterday. We haven't seen it yet because today's Friday.
Today's Friday, but can you tell who we're rooting for?
Can you tell who we're rooting for?
You can barely see your little N. That's why I got this big old sweatshirt. And the expectations are Army's going to whoop some butt. But I will tell you, and of course you guys will all know by the time you're watching this, who won. But I never bet on this game. I don't really bet on football or anything like that. Anyway, I don't gamble. But if I was a betting man, I would not bet on this game because you never know. It's like when two rivalries get together and in the NFL, and one's got this great record and the other one doesn't. You never know.
You can't know.
You don't know.
I would bet on it. You know why?
Why?
Not that Navy would win, but there's like 30% odds that Navy would win.
Oh, so bet on Navy if you want to make a boatload of money.
Right.
Yeah, actually, that's probably what I would do. I'd take it from.
Here we go.
I would take it from the standpoint,
the technical analysis perspective.
Yeah, I would. I'd be like, you know what?
Yeah.
I want you to win, Army, but I didn't go to West Point, so I don't.
Yeah, right. Yeah, well, that too.
I notice nothing that I have on says West Point. It just says Army. So I don't want to confuse anybody to think that I'm saying I went to West Point. I was a direct commission. They walked up, ominous, dominus, you're a lieutenant.
You're the guy.
After I'd been in the Army for 18 years.
Well, by then you probably deserved it.
It was like starting over again, man. It was probably the worst decision I ever had made for me.
Yeah.
You know. Anyway.
Voluntold.
Yeah. No, I did. I don't want to down the officer corps. It's okay. It's okay. I just came into it late in the game, and I was grumpy. You know, I was already E7.
You were grumpy early in the game.
I was. You know what? Truth. I was the grumpiest sergeant you probably ever meet in the Army, and everybody that served with me would 100% agree. That makes, as a matter of fact, most of those guys that I still know, like they don't even know who the heck I am now because I'm pretty. You know, I'm a happy-go-lucky guy now. I'm not grumpy at all. Like, what have I got to be grumpy about, right? But when I was fucking 20 years old, when I was freaking 20 years old,
in a foxhole?
When I put Army on, I start dropping F-bombs.
Yeah.
Start dropping F-bombs. Yeah. When I was 20 years old, man, I was the grumpiest sergeant you ever met. But we grow up and, we change. But I'm still rooting for Army, even though it's when I went to officer, Jerry knows this, but when I went to the, what is it called? I didn't go to OCS. I got a direct commission. It was the officer basic course, like whatever. And pretty much my whole class was West Point cadets who had just graduated. And in their words, not mine, had graduated towards the bottom of their class because of the dates that they were going to. I don't know how all that works.
Yeah. Yep.
So they're going really late and got their second choice or whatever, and so most of them were grumpy. So it really worked out well. We had a lot of fun. So
I'm going to go out on a limb and say the guys that finished at the bottom of the class were like the best guys.
Oh, we hung out. Yeah, they were fun.
Taking it from a guy who finished at the bottom of the class.
Yeah, and you were an athlete. Most of these guys were athletes. Like they were rugby players or, what, not field hockey. No, what are you football players? Because those, I think, were a little higher or whatever.
Really?
Anyway, a lot of good guys. I don't think any of them watch this show. If they did, they'd giggle a lot. But yeah, that was so that's my attachment to West Point is that I went through officer, basic school with pretty much a whole class of them. There was only like 3 of us that weren't, and one was like an ROTC guy, and then myself and another guy were enlisted who, got commissioned, and it's hilarious. It was hilarious. Every time we go out drinking, it's like these young kids, and you're like, "Oh, saddle up, kid."
Yep.
I've been doing this a while. Anyway, no war stories. Hopefully the best team won.
I'm sure they will. Whoever it is.
It's. I tell people all the time. I don't get this right now, but it's the only two football teams that both sides of the field have given a blank check to their country. So. You can't fault either one.
Yep.
They're all on the same team.
All right.
What do you got, man?
All right.
What do we got to talk about?
We got a few things to talk about.
All right, let's do it.
15 December. Here we go. It's going to be Christmas almost. Not next week, but the week after. All right. So we'll talk about what happened this week on the market real quick. We'll have a little chit-chat about Trump policies, pros and cons. Nothing to do with whether or not you like Trump or not, just what the policies
it's just the incoming administration.
That's all it is.
That's all it is.
Yep.
Don't read into this, folks.
Yep. No, it's not nothing. It's not political, but
we're not on either side if you really want to get into it.
It doesn't matter. Only care which way the market goes.
Yep.
Global liquidity, probably the biggest thing, is the biggest thing that has been driving the market, and is, I found a guy on YouTube that's pretty much what he focuses on, and we'll talk about that a little bit. Bonus charts, haven't done bonus charts in a little bit, but there's a couple really good ones, NVIDIA and SAIC, that I wanted to point out, and then the TSP fund charts. So Monday, consumer inflation expectations rose to 3% from 2.9. Not, ticked up 0.1%, but it's been pretty stable at 3% for pretty much most of the last 12 months, which basically means inflation is sticky. So it's not really coming down, and it's going to be hard for the Fed to continue to lower rates. But S&P was down 0.6% on Monday. Tuesday, Redbook. So Redbook is year-over-year growth of same-store sales. Kind of collapsed. It was up 7.4% last week, and it was only up 4.2% this week. So it's going to be kind of interesting to see what happens when we get the post-Christmas shopping retail numbers. And the S&P 500 was down 0.3 on Tuesday. So this is kind of this is a chart of Redbook, and it actually looks a lot like the S Fund. S Fund bottomed in 2020, came up, right, and then did this, if you remember a chart of the S Fund, did this kind of breakout, like failed breakout, and then rolled over, and we had a really big dip in the S Fund into 22. Redbook, went into 23, but it has not really, it certainly hasn't made new highs, and it hasn't really been accelerating to the upside. So retail is not doing great, right? And it's a pretty good barometer for the economy. And now it looks like it could be breaking that trend line to the downside, right? If you did a trend line here. So if retail sales starts coming down, the rest of the economy is coming down with it. There's so many things to be concerned about for next year. We've been talking about it for the last few weeks, and we'll continue to talk about it going forward, and we'll continue to see things in Facebook like CNS ride or die. And it's just I'm doing everything I can to not wave the flag saying we're at a top, but you have to be looking for it, Okay, so Wednesday, mortgage rates were down a little bit, right? 6.67 from 6.69 last week, and they actually had dropped last week, so that's good. New mortgage applications jumped to 5.4% from 2.8, so people are trying to take advantage of rates that are coming down a little bit. Core inflation, both month over month and year over year, remained constant for the past 3 months, which it's kind of given the Fed the green light because economists were worried that inflation is going to start moving higher, and it hasn't started moving higher, which is good. So it gives the Fed a chance to continue to lower rates, which we have a Fed meeting coming up next week, 17th and 18th. So on the 18th, I think, is Wednesday. We'll have the next Fed announcement. S&P was up 0.8 on Wednesday. Thursday, we had PPI, which is another inflation indicator, was up 0.4 versus 0.3 last month, and it was expected at 0.3. So again, hasn't really moved. Jobless claims rose to 242,000 from 225,000 last week. Not a huge jump. 225,000 was forecast, so it was up a little bit from what they expected, but not that big a deal. S&P was down 0.5%. And then Friday, we didn't really have any significant economic news, but the market was up at 10:30 this morning a little bit, but it's been falling. So we'll see how the week ends. And then, like I said, we got the last Fed meeting of 2024 next week. We'll get the latest Fed funds rate on Wednesday. All right, Trump policy, pros and cons. So everybody's talking about tariffs, deportations, DOGE, Department of Government Efficiency, regulations, and animal spirits. Basically is this idea that not everybody, but a lot of people are excited that Trump is in, and the market's going to do great because he's pro business guy, pro dollar, pro all these things that everybody's all excited about, which expectations is a big part of what pushes prices higher. And so if people expect prices to go higher, they probably will. But tariffs. So there's a lot of talk about tariffs. Anybody that has been kind of listening and following along, and certainly if you read Trump's book, he's a negotiator, right? So he comes out with, it's like if you ever read or saw any of the videos on how to negotiate, you go into a negotiation like with a wildly low number. So if you go into a car dealership and the car is $20,000 and you offer them $10,000, knowing that they're not going to take 10, but that's your anchor position. So a lot of people think that that's kind of what Trump is talking about when he's doing these tariffs. Like he's not really trying to put 100% tariff or 50% tariff or whatever on everything from China. That's just his position to start. But either way, tariffs are inflationary, right? He's also theoretically a strong dollar person. When the dollar goes up, yield goes up. So the problem, which is going to be interesting to see how it gets resolved. On the one hand, he wants rates to come down, and we need rates to come down because the interest rate that we pay on the debt at 36, 37 trillion right now is about the same as what we spend on the Defense Department in a year. So we need rates to come down so we can pay less interest, but you can't have a strong dollar and low rates. So it's going to be really interesting to see how all this plays out with tariffs.
Yeah, but let me so I'll give my thinking on the tariff thing, and I think where you started is where I more lean to is from governments. Tariffs can be a very strong tool for a government to use for trade negotiations, right? And so go back to when George W. Bush came into office. He had an MBA. He has an MBA. He ran successful businesses, oil businesses, things like this, right? Managed a Major League Baseball team, all these things. So he had this huge business, on paper, this business background. And everybody talked about how this is going to be the first president with a real business background. I don't know if that's true because I don't know every president's background, but if you remember that, I mean, we were old enough to, remember that kind of talk. Now, you could argue that it all got derailed because of 9/11, and then war was the only business we were in for a long time, right? So I kind of look at that like this: like we got this guy who is clearly nothing but a businessman, not even close to being a politician in his former life, which is not like George Bush was governor, right? So you got the epitome of a businessman as president now, and he's already had one run at it. So now hopefully he's gotten his kind of bearings. So if you put that kind of lens, right? Whether you agree with the guy or not, I'm just trying to say this is kind of my come from. You put that lens on your president, then he's gonna say things because he's a negotiator. It's the one thing he's certainly known well for is being able to negotiate. And so you're not gonna say out loud what you're really gonna do. Right. What you're gonna say is the things that get me into when I get in the room. We're gonna and if the other side really thinks you're gonna do it, like many presidents. Again, because they didn't have a lot of negotiation background or business background, when they get into the room with another politician from another country, there's no real expectation they're going to do that. No. I think this guy will. He'll be like, "Oh, you want to call me on it?" Like, I'm all in. So that's one take: trade negotiations, which I think is a good thing from a government business standpoint, right? The other thing that's kind of good about tariffs, if you depending on where you fall on this whole idea, yes, inflationary. However, one of the core principles behind tariffs is I'm tired of everybody buying your stuff. We make this stuff, but you're making it cheaper, so you're undercutting us. So I'm going to put tariffs on you that encourage the consumer here to buy this stuff that's available. Now, if it's not already available, that doesn't really work, but there's a lot of tech and a lot of industrial stuff that we do. They're buying over there. So you make that, even if you just make it fair, right? Not try to undercut them. Make it fair and let the consumer choose. I'm kind of on that side where it's like, hey, let's take that part. People would say, well, they got a better business model. No, they're just paying their people $3 a day. Right. Like that's not a great business model.
I mean, that was the last 25, 30-ish years of globalization.
Absolutely. It's to me, you're undercutting it in a way that really goes against our principles anyway, as far as Americans believe in fair wages and fair treatment and all these things, right? And so we're kind of encouraging it by letting them undercut us. And then we go to other countries, and I'm not trying to name countries because it really doesn't matter. I go somewhere else to get it. So if those are kind of the come-froms from this tariff thing, and I kind of think they are between the lines, maybe not as bad. And maybe it doesn't have as much of an inflationary result because, you're kind of offsetting it by raising, consumer spending here instead of elsewhere. So it'll be, as always with this guy, it's going to be fun to watch.
It's going to be interesting to watch.
Because you can't guess. If there's one thing that I remember from the last administration when he was in, the rules are out the door as far as what most politicians do, and they kind of fall in line. And you go back and look through history, Clinton wasn't that much different than Bush, and Bush wasn't that much different than Obama. Yeah. They all have their little key things they're doing. But when you go read, as we did back in the day when we're working in high levels of the government, and you're reading the federal budget, if you ever want to know what the federal government really cares about, don't listen to the news.
No, OMB tells you.
Go read their budget. Just read the budget, and you'll go, oh.
These are the things that we care about.
Because if they fund it, they care about it.
Yeah.
And so that's where I go find out if they can say anything they want to say. When the budget projections come out for 2026, that's the ones they're really going to be on impact. Yep. They're not going to have much impact in 25, 26, 27, 28. If you go look at those budget projections that they're putting through,
that's what's actually going to.
You're going to know what's important to them.
Yeah. Speaking of that, before I forget, 15% increase for junior enlisted in 25 salary increase. That's pretty awesome.
Yeah, it is. I mean, I hope that comes through base salary and not other entitlements. Not entitlements isn't the right word, but housing and food. Mostly because, you do get taxed on your base salary, so that kind of hurts. The other stuff not so much, but that also impacts so many other things. Is our base salaries in the military are so low. Yep. There's plus and cons. I get it, but I hope that 15% is like a hard salary increase, not more housing. It's money either way.
Yeah, but you're right. In the big scheme of things,
base salary,
you get more retirement.
If I was a soldier right now and I was 22 years old, I'd want better housing, more housing money. Yeah. But your big picture is you got more money you can use to invest. Yep. All these things. So anyway, that's a great thing if they're able to pull it off. Yeah. I mean, I wonder how many officers they're going to fire to afford it.
They could probably fire a few to afford it and do just fine.
Get rid of a few generals and you could pay the whole military. Yeah. All the enlisted guys. Your son will be happy.
Yeah. He'll be happy. My daughter, I don't know, but
they're not cutting her pay.
No, she's a submariner. They're not cutting her pay. They need submarines. How does tariffs affect the market? So if you're right and you don't think it's too inflationary, or at least it's offset, then maybe the market doesn't look at it as a negative. But basically, all the things I have on this list are almost contrary to the animal spirits idea. Everybody thinks Trump's going to do great, but really, if tariffs are inflationary, it puts. So if you could make a widget, for 2/3 less in China, and now we're going to put all that savings in tariffs, then companies' earnings go down. Like it's a direct correlation, right? So you might not see it in prices as a consumer. That's possible. You'll certainly see some of it because I'll have to pass on some of that to the consumer, but earnings will go down. It's like math. So unless it's offset by something else, so maybe you're right. But if it is inflationary, if they do, corporations have to pay more to have the same products sold at the end.
But only if they have to pay more. If they're able to, and it really depends on what we're talking about, what industry we're talking about. Mm-hmm. And this is where it gets really technical, right? And it's outside of my scope. I'm not going to pretend like I'm an analyst enough in every industry. So, but I'm just going to pick something like AI, where we have a choice right now to be the overwhelming player in AI for the next 20, 30 years. We have a choice. If we give that up and it starts to become easier and cheaper and all those things somewhere else, and although there's lots of pieces to AI, right? A lot of it has to do with cloud, right? Anyway, no need to go down the rabbit hole, but let's just use that as one example because it's an up-and-coming industry. It's only a couple years old.
Yeah.
It's really more like 10 years old, but it's only been in the news
infancy.
for yeah. So anyway, that's a good example of like if you make that play correctly, we're dominating AI for the next 30 years, and it's gonna play out well for us. We might not dominate in 4-door sedans, right? But if there's technology like electric vehicle technology, there's just things that, and as again, you forget all the politics, but all the people that you're bringing in, they're all very wealthy businessmen and women who have done well at all this stuff. And so if anybody might figure it out, they might.
Yeah.
And so it depends on, again, what you're talking about, what he's talking about when he says, I'm going to raise tariffs. He doesn't say exactly what he's going to raise it on. Right. And he's not. So, and of course that could all be, just blowing smoke just to get elected too. Like, I mean, he didn't build a wall.
Right.
And that was his platform last time. So who cares? It's, I care more about the tariffs than I do the wall, but, yeah, this is going to be fun to watch if you care about this stuff. Obviously, I think we do, and I think people that watch this probably do. But it's going to be a unique experiment on how to run the government. And if anybody agrees that the government runs inefficiently, I'm on board with it.
Yep.
I'm not on board with like firing all the civil service people kind of thing. Don't get that wrong.
Based on your Social Security number? Like that?
Exactly. But all that's got to be just. It's got to be just podcast talk. I can't imagine that kind of stuff happening. But I don't know.
Strange things have happened.
They're not going to fire us. We already quit.
Yeah. Can't really fire us now.
We already left. But yeah, there's definitely a bunch of sides to this. But I do think we have seen some big inefficiencies. Yes. And the agencies that we worked for, so you're not gonna catch me saying, "Oh, the government runs fine."
Yeah, no.
Nope.
Nobody thinks.
I'm not on that side. All right, where'd we leave off at?
So deportations.
Oh, we're only on the second one.
We're on the second one. Yeah, we need to keep moving. But deportations, it's so the only reason I threw up because all this is just with respect to the market moving up and down. At the end of the day, I don't have a position on any of these things, but. We have a declining population, as most countries in the world do. We have a declining population rate, and so the more people you need a rising population to have this, 4, 5, 6% growth rate that we need to keep the system chugging along, and we don't have that. If you deport however many million people or whatever that he's talking about doing, if they're all in jail, that's fine.
Yeah, they're not contributing anyway.
Right.
Yeah, that's the biggest point. If you're getting rid of people that are supposed to be in jail or in jail, they're not having much impact on the economy anyway.
Right. It'll if it's enough of them, it'll show up in the numbers supposedly, will show up in the numbers, but it won't have an effect. But if you start deporting people that do have an effect on the economy, it will matter, right? DOGE, the Department of Government Efficiency, we will see. You can't fire half the government based on the Social Security number. There are definitely things that they can do on the periphery, but entitlements, Department of Defense, and the interest on the debt, other than those three things, there almost isn't any money left anyway. So, yeah, you could cut Department of Education and it wouldn't put a dent in what it wouldn't put a dent in anything. So
yeah, again, you want to find out what will work, where the inefficiencies are as far as the number impact. Just go look at the budget. Yeah. It's the quickest way to do it. I heard an argument that one of their folks made in their incoming administration to get rid of I messed this acronym up. They created the DNI, Director of National Intelligence, right? And all it was supposed to be like 100 people, headquarter thing. Yeah. I won't say where it's at. Everybody knows where it's at, but yeah, I just almost caught myself because it's supposed to be
super secret.
Yeah. But it's in this area. But anyway, we've both probably been in that building. I've been a few times. But anyway, it grew to like 1,000 people spread across the country.
Yeah.
I'm on board with that's probably pretty inefficient. If you create a headquarters element with
1,000 people that are spread across the country.
what are they doing, right? And they're not even in any of the actual agencies.
Yeah.
So that's the kind of stuff I'm on board with. However, that budget isn't going to it's not going to change the American economy because of it. Now, will it start to tune up some of the agencies that need it? Yeah, I think so, because like intelligence agencies need to be streamlined, as a principle, not bloated. Because if you have a bloated intelligence community, that it's just too big and it's not working together. It needs to be streamed down, lean, fast.
To make it more
actionable.
Operational.
Yeah, absolutely. Yeah, and speaking as an Intel guy, I think that it's pretty confident that when I've seen the difference between, 1,000-person team and a 100-person team, the 100-person team was way more useful. Yeah. 1,000 people is just too many Indians and too many chiefs, and that's probably inappropriate to say. Sorry, but yeah, whatever.
Well, that's the thing is efficiency. So people either sort of collapse together the idea of saving money versus efficiency. So government spending needs to continue because it's a big chunk of what's driving the economy, right? So you can make it more efficient and still spend at the same level and have better outputs, right?
That's the key.
Yeah.
That's the key. And if that's what we're headed for, I'm all on board.
Then the market will like that.
Yeah, but efficiency, producing more versus spending less, making cuts. I mean, that's never been on the conservative agenda. No, generally
it's never
speaking.
been on anybody's agenda.
Right, nobody's trying to spend less money.
But if we do start spending less money, that's not good for the market.
Right. Yeah, but the funny thing is, I mean, in general, and we're going to take us a while to get through this list. But outside of this list, the thing that I think I've learned the most in the last 5 years or so is that where we've headed now, that everybody has access to the market, where that wasn't the case 10 years ago or so. Meaning, anybody can get access to it through their computer, whatever. It's not just institutions now. Because of that, the institutional investors, big money, doesn't always have the most impact now. You've got so many individual investors, retail investors, that it's swinging the other way. What I mean by that is if they're optimistic, it really holds things up that probably shouldn't hold up.
That might be happening right now, maybe.
The smart money, whatever you want to call it. Yeah. It's not dumb money versus smart money, so I don't really like that
That's just
term.
what they call it.
Yeah, but the smart money, the big money folks, have paid lots of money for lots of analysis. And so anyway, the point is that some of that optimism can ride this up where normally it wouldn't. So all these things we talk about, inflationary versus spending and all these things that like the average retail investor might not give a crap about.
Yeah.
And they might be like, no, I think it's going to go higher. Yeah. And I'm going to buy more.
Yep.
Then it happens.
That is what happens. It happens at every top.
Yeah.
And it's happening now.
Yeah. And it's happening passively in a lot of ways, as you point out quite often, because every paycheck someone's buying more of the S&P 500 in their 401k. Yep. With no real,
they call it the mindless robot.
Yeah, I'm not really thinking about it.
No, it doesn't matter what the price is.
I'm giving Microsoft my money.
Regardless of what the price of Microsoft is. You're not buying it undervalued and selling it. You're not selling it, period, but you're buying it at whatever the price is.
Yeah. All right, next one.
All right, regulations. So if he cuts regulations, that's going to be good for the economy. I don't see any downside for the market if regulations get cut.
Yeah, if you're on this side of capitalism, regulations, you're not going to like regulations.
Yeah, I mean the water might get worse or whatever, but but I don't. I'm not saying I drink a lot of water.
I want the water to be clean.
I want the water to be good. Yeah, good, clean air and all that.
But yeah, regulations normally hinder market activity and or corporate activity. Yep. But wherever you fall on that is okay. But it is generally true that they start slicing regulations, the market likes that.
Yes, especially energy. So
100%.
He's all about drill,
100%.
Baby, drill, and all that. So if you start cutting regulations about
a lot of happy oil people out there.
Yeah.
If you haven't watched Landman,
the
new series is about oil folks. It's actually pretty cool. But I digress.
Animal spirits. That's what we've been talking about. If generally the retail, because obviously
I haven't heard this term. You're gonna have to
Really?
help me with that.
Yeah, no, I wish I had the definition, because it did come from a very specific thing a while ago, and I can't remember what it is. It's a pretty old term, but it's the idea that people get excited. It was really big when Reagan's first term. People just get excited for change, and we're moving in the right direction, and everything's going to be great. And the market is, as you always say, it's people. It's based on people's expectations, and so when people are excited that change is coming and it's all going to be good, animal spirits are released.
I just Googled it. In a political context, refers to the collective mood or confidence of people and institutions or markets that shape political outcomes and policy decisions. It includes like optimism, fear, greed, enthusiasm, uncertainty, things like that. Yeah, makes sense now.
Yep, good stuff.
And it was popularized by economist John Maynard Keynes.
Keynesian. Yep.
So it's been around a while.
Yep. That's another podcast, Keynes and his ideas that are probably going away in this administration. Anyway, so that was our ramblings about the non-political ramblings of Trump pros and cons.
Incoming administration.
Incoming administration, yeah.
I tend not to use his name because it just infuriates people. I was like, the incoming administration,
Right.
whoever that is.
Yeah.
Whoever that is.
All right, liquidity, global liquidity. So this guy, Michael Howe, is where I got his latest chart from YouTube, but anything you find on this guy from Cross Border Capital, he's really smart, and he's been around for a long time. And what he focuses on is this thing that he calls global liquidity. There's no like definition per se for it. It's the amount, you could call it M2. It's the amount of money that's coming into the system. And from his perspective, it's global. It's not just the U.S. But he came up with this really good chart. It's cyclical, so obviously sine waves of the red dotted lines there, but all these different things that he pulls together that he calls the global liquidity wave, and it kind of matches as you look through there, right? We had when liquidity is going up, the market's going up. When liquidity is being drained from the system, the market goes down. And when the Fed cuts rates, on the face of it, it adds, it makes it cheaper. So therefore, you're increasing liquidity. When they did there's a thing if you follow financial media, I just lost my train of thought there. There's a bucket. I can't remember the name of it now. There's a bucket that they put money into and take it out of. The Treasury does, and when they're putting money into it, it's taking money out of the system. So it's
I can't help you. You caught me off guard.
Yeah, no, I'm blanking on the name of this thing. I just had it and I forgot it.
It might be the whiskey from last night.
It could be. Yeah, it could definitely be.
We had one of our good longtime subscribers in town last night, Al Bailey. We'll give him a shout out.
Yep, he hurt me.
We all work together. He's not just a subscriber. He's a very good friend.
Yeah.
But he has been with us from like the beginning.
Yeah.
So he's a big supporter, and we all met out for a happy hour.
Yep.
So
Yep. So
give Jerry a break.
A little bit raspy or moving a little slow today, but that's okay. Anyway, so as liquidity increases, the market goes up. When liquidity decreases, the market goes down, and that's just like government spending is a big one. If the government decreases spending, it's decreasing the liquidity that's in the system, and the market goes down from that. So it's definitely worth checking out. At least keeping track of this. You're not going to really find this chart anywhere unless you find him on YouTube and he keeps doing the updated charts. But what he's basically saying is the black line is actual liquidity. The red line is the sort of the sine wave of it. And he's expecting liquidity to continue through 2025, but the rate of it is decreasing. So basically the momentum behind this increase is decreasing. And eventually we top out sometime late 2025 and then roll over, and he thinks 26 is really going to be the year that we get hammered. But 25, everybody that I follow seems to think that 25 is a big transition year. It's extremely volatile. Some people think we come down a little bit and then go to new highs and then roll over. Some people think we've seen the high, but there aren't. I don't know too many people. There's a couple, but I don't know too many people that are optimistic about 26 and 27. But global liquidity definitely is worth watching, and anything that Michael Howell does is worth checking out. Okay, 2 bonus charts, NVIDIA and SAIC. A couple things I wanted to point out. We haven't done bonus charts in a while, but a lot of people were asking about it in the group. And so this has nothing to do with TSP. It's just kind of a
learning tool
of technical analysis. That's
yeah.
All right.
We're not telling you to buy NVIDIA or buy SAIC.
Nope.
It's just useful. It's sometimes, it's just nice not to look at the same same
charts
charts
of the
every
C fund and the S fund. And
yeah. By the way, I hope I didn't just jinx Army, but that hoodie was hot as hell.
Here? Yeah.
We have a pretty warm office, and I was like, I knew I wasn't going to make it.
Yeah.
It's I put off a little more heat than Jerry.
Okay, so NVIDIA, right? Everybody knows NVIDIA has been leading the market higher for the last couple of years. If you're in it, that's awesome. If you're not in it, you're probably kind of happy about that right now. But this is a 2-hour chart of NVIDIA, right? So every one of these ticks is 2 hours of price movement. And so this is a really classic head and shoulders setup. It's a head and shoulders top. So this is the left shoulder. This is the head. This is the right shoulder. And this is what they call the neckline. Okay? So the theory behind head and shoulders.
This always gets me a little confused, where that one little dip in the middle of the neck, you have to kind of ignore.
Oh, this right here?
Yeah.
Yeah.
Because, if you're like me and a lot of people and you're a newbie and you're like, but it's got double shoulders on that side. Yeah. So you kind of have to ignore. What makes you ignore it? Because it didn't go down far enough?
Yes.
Okay.
The neckline is so the 2 most important things are the head has to be above both shoulders. Ideally, both shoulders are the same. In this case, this one's a little bit lower, right?
It should definitely be close.
They should be close to the same height. The head definitely has to be higher, but the neckline is the thing. You got 3 really good points, right? This one is way too high. So you got 3 really good points here to make the neckline. And I actually did this yesterday and I updated it today before the show because that's what was happening this morning. And so if we get down here, 130, whatever this is, it's very likely that NVIDIA, the theory is that at a minimum, from the top of the head to the neckline, so whatever this distance is the minimum downside. So if it breaks, but we've seen a lot this year. This year we've seen a lot of head and shoulders setups that have come down to the neckline and reversed and gone higher. So that's what
I was going to ask. So basically, you're looking at 2 pretty good options. One is a well-known stop point, right? A point when you know to get out, because if it crosses that neckline, it's going down. Right. But if it doesn't, it bounces back up. There's a good chance it'll at least go as high as the shoulder.
At least,
yeah, as the shoulder, right? Yeah.
Yep, that's actually true. So you could look at it, and that's true of all these patterns. You can look at it and say, okay, it's a head and shoulders. It's going down. That's fine. It could also easily turn into this sideways consolidation, right? Easily, it comes back up, hits the top, and comes down like that. Could absolutely do that. The beauty of it is kind of what you're alluding to there. When you get down here to 132, right? If you're on that 132 line and you buy it, you can have your stop at 131. Like you can have a really low risk entry there, and if it breaks through it, you get out. You took a little loss. But if you buy it there and it moves to the upside, it's all gain.
Yeah, I do this all the time in my IRA because, Fidelity lets you set all that up and you just got your stops in place, and I don't have to worry if it cuts through it, boom, I'm out, and it's not going to hurt me. And if it goes up, great, I got a little something. Now I got to pay attention now if I didn't set the top that I want, right? Which I usually don't, because I don't try to guess. You got to let it play out, kind of thing. But then you got to be watching it. But anyway, it's very useful. Very, very useful if you can recognize it.
Yeah. I mean, that's the whole thing. It's the ability to identify a low risk entry. It's the most important thing. You can apply it to TSP, but you'd have to be out to get in. So
it happens every once in a while.
Yeah,
you see it, but it's not as often useful in just the three
regular
the CS and I.
Yeah. All right. So be watching. So that's whether or not you're watching in video, but that's the idea of a head and shoulders top. SAIC, pretty interesting. If we went back to May of 2022, so it's a pretty 3-year-ish long trend line. So you would expect, and it's a pretty big range, right? You're 120 to 155. That's a pretty good percentage range. You would definitely expect to get support like we did there, right? We got support all the way along at that trend line. So it was a very low risk entry, especially when we got support right here, right? Anywhere in here, if you'd bought it, you would have expected it to go higher. And this day was crazy. I was watching this. It was either last week or this week. I can't remember, but it was recent. It opened up here at 132 or 3 or whatever, and closed the day down here at 121. It was a huge negative reversal candle, and then it just kept dropping, and it dropped below this low and broke the trend line. So if you had bought it in here, you would have taken a little bit of a loss. But the odds were that it was going to go higher, and it goes against you sometimes. That's just how it works. But right now, it's really oversold, right, on relative strength. So you're looking at it going, well, if it's way oversold, it must be a good time to buy it. It's broken through this 3-year long trend line. It's not a good time to buy it, right? If it got back up and got above it, maybe fine, but it's very possible that it comes up, hits this trend line, and then rolls over. So if SAIC is on your radar, if you're looking to get out of it, if you had it and you're looking to get out of it, I would be looking for a move back up to that trend line, and I imagine there would be a lot of selling at that point, and then it goes lower. But we shall see. All right. Anyway, that's how you would use trend lines and head and shoulders top. Okay, TSP fund charts. So it's a consolidation week. A lot of times in December, there's a lot of rebalancing. A lot goes on in the middle of December to get ready to go into the new year. And so once all that stuff gets done in the middle of December, you tend to have the Santa Claus rally. We'll see what we get this year, whether or not the election rally was took from the Santa Claus rally. I mean, who knows? But we've been talking about this for quite a while. Price has been going up. This is a weekly chart of the C fund, right? Price is going up, but the momentum behind the price increase, the momentum is decreasing. And so a top is coming. Who knows when? I have no idea. But as for right now, this is as of Thursday's close. It's a little bit down for the week, but it's not a big deal. S fund had a little bit of a dip this week for sure. We definitely haven't gotten overbought very often in the S fund in the past couple of years. I mean, even going back here into 2021, we weren't above that 70 line on a weekly basis in relative strength. We got above it here when the breakout really kind of got going from this consolidation channel, right? And we got above it on the election week, and then it's kind of been rolling over, which to be expected. So you get a pretty good amount to come down before you get support there at that 20-week moving average line. So on a percentage basis, the S fund can come down quite a bit before it likely finds support. I fund looked like it started to break out, or at least start to catch back up with or move in the same direction as the CNS funds last week. And we were talking about how, the I fund doesn't go down while the CNS funds go up for very long. It doesn't work that way. And so either the I fund is going to bring the CNS down, or the CNS are going to bring the I fund up. For right now, I mean, iFund's down a little bit this week, but I would still say we're hopefully finding support there at that 50 line on relative strength, and hopefully we stay above that 20-week moving average line. F fund is a really important one to watch. Again, if we drew this trend line, we are right on it. If we get below this low, right? If the F fund rolls over and starts moving down, that is not good, right? It means it's consistent with inflation moves higher, rates move higher. It could certainly happen, but it's not. It would not be good for bondholders. Below this low in the short term is a problem. Below this low is a much bigger problem. So we shall see. And the G fund just keeps on going up to the right. So that's what we got.
Questions. As always, if you have questions, put them in the comment section wherever you find the videos. If there's not a comment section, shoot it to us on an email, support@growmytsp.com.
Yep. Don't politically bash us.
Oh, God, no. We're the wrong guys. We're not political, but we are very, what's pro-market.
Yeah, pro-market, absolutely.
All right, guys. Hopefully you had a good weekend. Hopefully Army won.
Hopefully your team
right
won.
Now I'm crying.
Yeah.
No, I won't cry. Yeah, and hopefully you're getting your Christmas shopping or your Hanukkah shopping or whatever you're doing, because it's getting close. All right, guys.
Alrighty.
We'll see you next weekend.
Out of here.